Leading mergers and acquisitions professionals are cautious about what the new year might hold after what seems to have been a disappointing 2012 in that department. As we get a review of this year's movements, we're joined by Elaine Green, Senior Deputy Editor at Merger Markets. Hello, Elaine. In what way would you agree with that statement that the year has been fairly disappointing on the deal front? I'd imagine with a lot of nervousness, uncertainty, bickering about what good value, what appropriate pricing might be. It would have been a difficult year for deal making.
Yes, we've seen a dip compared to last year, but actually not as big a dip as we would have expected. I mean, overall, Africa and the Middle East had 39 billion worth of deals this year, which compared to 42 billion last year is not that big a drop actually. So despite the difficult markets globally, Africa has been, bearing up pretty well really, and despite the obvious, lack of confidence recently due to the labour issues surrounding the strikes at the mines. We're expecting quite an uptick in the next 12 months or so. Those we surveyed as part of our deal drivers research tell us.
And Elaine, just looking back over the past 12 months, you refer to the mining sector. That seems to be where the bulk of the deals have taken place in the mining, energy sectors. And that makes sense, right, given the kind of activity and the noises we're hearing?
Absolutely. 5 of the top deals in Africa were in South Africa, and the majority of those are in the resources sector. And we saw, for example, IDC and the Black Economic Empowerment Consortium buying Anglo-American Score South for $438 million, and Anglo Gold Ashanti acquiring Mine Waste Solutions, subsidiary of Canada's first uranium corporation subsidiary, for $335 million. So we've seen some very sizable deals. The biggest deal in the whole of Africa was the France Telecom acquisition of Orascom, and agriculture has also fared very big on the scene in other parts of Africa.
Elaine, just leading on from that, if you look at any of the recent studies and surveys that have come out on the rest of Africa, notably Lines on the Move by McKinsey from a couple of years ago, it does appear that consumer-facing industries are the kind of big growth and go-go areas in Africa. Is that reflected in merger and acquisitions activity? I'm thinking of things, okay, you've mentioned telecoms, for example, but any other consumer-facing industries that would be feeling that kind of benefit in the rest of Africa?
Yes, well, as you say, then there is a general growth in Africa and a development which we are beginning to see impacted in the mergers and acquisitions side of things. And, we've seen this in terms of resources, but also the property side of things. There's been a lot of liquidity, particularly in South Africa this year, on the property side. We've got the big deal at the moment going on between Redefine and Fountainhead. But also, as you indicated, in terms of consumer, we've seen quite an uptick in consumer areas, pharmaceuticals, the leisure industry is also growing. So as Africa develops further, so the appetite for goods and ultimately mergers and acquisitions in those sectors increase.
Elaine, if we could just close by looking at the sources of capital, so the investors putting money not just into South Africa but into the African continent, to what extent is it intra-African flows, and how much of the inflows are coming from beyond the continent?
Well, we're seeing both. We're seeing both a lot of inter-African deals and a lot of inbound as well. For example, just yesterday, the announcement of Palabora for the Chinese consortium there, making the acquisition from Rio Tinto and Anglo-American. That's a very interesting indication of the interest of Chinese investors, particularly in steel and other sectors which are likely to impact upon their appetite for infrastructure in China.